This is Nightly Business Report with Sue Herrera and Bill Griffith.
Record finish. The Nasdaq closes at an all-time high with some big-name tech stocks hitting new milestones. New promise, the companies behind cutting-edge cancer treatments that are leading the charge against that disease. End of an era. The man who turned Starbucks into a global coffee brand is leaving the company, and many are wondering what's next for him and the business. Those stories and more tonight on Nightly Business Report for Monday, June 4th. Good evening, everyone, and welcome. I'm Sue Herrera. Bill Griffith is off this evening. Investors started the week in a buying mood. The Nasdaq notched a record close, its first since March, led by names like Apple, Amazon, and Microsoft. A rise in retail stocks also helped lift the Dow and the S&P 500. Today's gains follow Friday's rally, which was fueled by the better-than-expected employment report. The Dow Jones Industrial Average finished up 178 points to 24,813. The Nasdaq advanced 52, and the S&P 500 added 12. Well, with markets off to a strong start, let's talk about what may be in store for the major indices for the rest of this week. And we're joined to do that by Liz Ann Saunders, Senior Vice President and Chief Investment Strategist at Charles Schwab. Good to see you, Liz Ann.
Hi, Sue. Thank you.
It does seem to be good news pretty much all the way around on the economy and also on earnings.
Oh, no question about it. The jobs report obviously was gangbusters. The only thing you could find fault with was the little bit of a dip in labor force participation. But there are some long-term secular demographic reasons for that, not least being the aging of the population. So it was overall a good number. And I think what a day like today, as well as Friday's action in the market, just tells you is that for now, anyway, good fundamental economic news is offsetting concerns that will be ongoing on tariffs and trade. So for now, I think the economy is sort of reigning supreme, but that may not persist.
Right. So what does that mean for the market? Are there certain things that you were going to be watching for this week or looking for? Trade, obviously, is kind of front and center right now, but are there other things that you're going to be keeping an eye out for?
No, I do think trade is front and center. And if you look at the last couple of months and you look at some of the more volatile individual days, many of them have been tied to announcements that come on tariffs or trade. And obviously, those are moves in the market in both directions. So I think any news on that front will continue to either support stocks on a given day or hurt stocks on a given day. But I also think any change in expectations around Fed policy, I think in the next few weeks and even beyond the Fed meeting in June, I think that is probably the most important thing that's front and center in the minds of investors is the trajectory of interest rates as we look into the rest of this year.
And is June pretty much a foregone conclusion that we will see a rate hike? And how many more do you expect, given the strong economic data and Friday's jobs report? How many more hikes do you expect?
Yeah, I think June is a foregone conclusion. It's interesting, when we were going through the turmoil a week or so ago in Italy, you actually saw expectations in the futures market dip a little bit, even for June. So for a little while there, it wasn't a foregone, i.e. 100% chance. That popped back up in the immediate aftermath of the jobs numbers, but also the possibility of a total of 4 rate hikes this year, which would be 3 more in addition to the one that the Fed gave us in March. Those expectations actually moved back up pretty significantly, not to anywhere near 50%, but they moved up in the aftermath of the jobs report. So we've been saying at least 3 this year, and our calculus on that being the most likely look for Fed policy hasn't changed in light of Friday's number.
And, you know, there are those who kind of are hand-wringing about the fact that we might get those 4 interest rate hikes. But on the other hand, it means the economy is strong enough to take those hikes, correct?
Yes, I think that really what you have to look at is inflation and inflation expectations. There's kind of a double risk here. I think if the Fed sort of continues on this path, doesn't move beyond what they telegraph and where the expectations bar is, I think we're probably fine. There is a risk, of course, that if they pare back the pace of interest rate increases in the face of rising inflation, then the risk is that they're seen as being behind the curve. And of course, there's the other side of that, which is if they continue to move and they end up at 4 hikes this year, but the inflation data does not support that, that's a risk then that the market views the Fed as going a little bit too far. But I think the current balance between the data we're seeing on inflation inflation and expectations for Fed policy is probably about the right recipe for the market in the near term.
All right. On that note, Liz Ann Saunders, thank you so much. Appreciate it. Liz Ann Saunders is with Charles Schwab. Shares of Microsoft, meanwhile, hit a 52-week high on news that the company is buying the coding website GitHub for $7.5 billion. Microsoft hopes the purchase will convince more developers to create applications for its cloud computing business. It is also a way for Microsoft to challenge Amazon. Microsoft's CEO says this deal is similar to past acquisitions.
What we have done with Minecraft, what we have done with LinkedIn gives us confidence that we can in fact acquire, grow, and have these communities thrive. And that's what will basically be things we'll look for. It's not that we have speeded up or slow down, but we'll go by those three criteria. Is it a growing market? Can we add value? And can we integrate it well?
Investors liked the acquisition, sending the stock higher in trading today. Shares of fellow Dow component Apple closed at a record. The stock hit that milestone on the first day of the company's developers conference. And at that conference, Apple addressed a controversial topic surrounding its flagship iPhone, and that is smartphone addiction. Josh Lifton has the story from San Jose.
It's become such a habit that, we might not even recognize just how distracted we've become.
At the Apple Worldwide Developer Conference, the tech giant revealed new ways for you to spend less time on your iPhones and iPads.
And today, we're announcing a comprehensive set of built-in features to help you limit distraction, focus, and understand how you're spending your time.
The features will be included in the new iPhone iOS update, include a Do Not Disturb mode, a setting that allows you to sleep without being disturbed by incoming messages or email alerts. This feature can also be applied during the day. Another way you'll soon be able to cut back on your screen time is a feature called Time Limit, allowing users to set usage limits on individual apps. So if you spend too much time on something like Instagram, your phone will alert you. And soon you'll be able to receive a weekly report that shows the amount of time spent on different apps. There's been a big push from the investor community for Apple to do more when it comes to customers' digital well-being. The debate began earlier this year when Barry Rosenstein at Jana Partners, along with CalSTRS, raised the issue. The Apple investors, who collectively own about $2 billion worth of the stock, argue that teenagers spend too much time on their smartphones and that Apple needed to do more to combat this iPhone addiction. Jana responded to today's news, "While we will review the details and Apple's follow-through will be important, this looks like a clear win for parents and families, as well as shareholders, given that this should strengthen Apple's ecosystem for years to come." The iOS 12 upgrade will come in the fall, when parents will also get more power to control the amount of time their kids spend on iPhone apps. For Nightly Business Report, I'm Josh Lipton, San Jose, California.
And in the race to a $1 trillion market cap, Apple remains in the lead at $942 billion. Amazon is second, and Alphabet rounds out the top three. Microsoft is in fourth place, by the way. Dow component McDonald's is modernizing its business. The company plans to add self-order kiosks to 1,000 stores each quarter. Markets like Canada, Australia, and the UK already have kiosk service and mobile ordering, and the CEO says he expects the investment in the US to pay off.
If people want to just dwell, have a little bit more time, they can go to self-order kiosk, they can browse through the menu, they can start to selecting, and they start to see the broader ranges perhaps, or they may want to customize the food they've got. Then you can also pay clearly on credit debit there as well. And you can then receive table service. So you can then just take a little tent card, a Bluetooth-enabled tent card, take it to the table, and we'll bring your food out for you. So what we are finding is when people dwell more, they tend to select more. So there is a little bit of an average check boost as well.
Investors liked what they heard, sending the stock higher in trading today. A battle is brewing between Dow component Boeing and two of its largest suppliers. Today, Boeing raised the stakes by announcing it will start building a key component that for years has been manufactured by Honeywell and United Technologies. That lifted shares of the stock by about 1%. Phil LeBeau on why Boeing is branching out.
Boeing is best known for building some of the most popular commercial airplanes in the world. But increasingly, it's looking to boost profits by making and servicing the guts of those planes, the avionics and key components from the cockpit to the tail. The company's latest move is a joint venture with the French aerospace firm Safran. Together, they will build and supply auxiliary power units, used primarily to start up planes parked on the tarmac. The APU market is dominated by Honeywell and United Technologies. Those aerospace suppliers have grown their bottom lines in part by offering APUs and a wide array of aircraft systems and services to the airlines and cargo operators who spend billions on new planes. It's a lucrative business with healthy profit margins, which is why Boeing CEO Dennis Muhlenberg wants more of it. As he told us in April, Boeing is actively looking to make deals that will grow its services division.
So where we can find strategic acquisitions that complement our organic investment in services, that's a top priority.
Last year, about a fourth of Boeing's revenue came from its global services division, a percentage the company expects to increase, especially given the backlog of orders and the ability to sell more components and services to customers. Phil LeBeau, Nightly Business Report, Chicago.
Howard Schultz, the architect of the modern Starbucks, is severing all ties with the company. His departure is effective at the end of the month. The news sent the stock initially lower in after-hours trading. Andrew Ross Sorkin broke the story and has more from Seattle on Schultz's departure.
It is the end of an era at Starbucks. Howard Schultz, the executive chairman of Starbucks, announcing he's going to be stepping down from the company and the company's board at the end of the month. Of course, Howard Schultz built today's modern Starbucks from just 11 stores here in Seattle to over 28,000 stores in 77 different countries around the world. The announcement coming just a week after the company closed down its stores for 4 hours in the United States for an anti-racial bias training program after an incident in Philadelphia. Mr. Schultz had planned to step down in May, but his plan was upended by that incident in Philadelphia in April. Schultz's decision to step away from Starbucks likely to only fuel speculation that he could run for president in 2020. He has been quite outspoken on a number of big social issues, and his name is often bandied about among a number of executives that could run, including Jamie Dimon, Bob Iger of Disney, and Mark Cuban. In a letter to employees today, Schultz said, "I'll be thinking about a range of options for myself, from philanthropy to public service, but I'm a long way from knowing what the future holds." In an interview with me in the New York Times, he said, quote, "I want to be truthful with you without creating more speculative headlines. For some time now, I've been deeply concerned about our country, the growing division at home, and our standing in the world. One of the things I want to do in my next chapter is figure out if there's a role I can play in giving back. I'm not exactly sure what that means yet." In the meantime, Mr. Schultz says that he plans to run his family foundation and write a book about corporate social responsibility. For Nightly Business Report, I'm Andrew Ross Sorkin in Seattle.
It is time to take a look at some of today's upgrades and downgrades. Evercore ISI is telling clients to invest in Macy's for the long haul. The analyst says Macy's is figuring out how to manage inventory and market to consumers in the digital age. The firm also raised its earnings estimates on the company for this year and next. The stock gained 4% to $37.10. Whirlpool was upgraded to outperform from neutral at Credit Suisse. The analyst there says the rise in appliance prices should help offset higher input costs. The price target is $195, and the stock rose more than 2% to $149.22. Prudential Financial was upgraded to buy from neutral at Goldman Sachs. The analyst cites the company's strong cash flow. The price target is $117. The stock rose a fraction to $99.17. That same analyst at Goldman Sachs downgraded shares of MetLife to neutral from buy. The analyst sees a drop-off in buybacks in the second half of this year. The price target is $52, and the stock finished lower at $46.33. Still ahead, medical advancements in the fight against cancer. It may seem counterintuitive to think that a recession could be on the horizon, but that's exactly what some economists are saying, even as growth picks up and the unemployment rate falls. Steve Leisman explains.
The National Association for Business Economics out with its latest survey conducted before the Friday jobs report, showing that strong growth is expected to continue. For the next 2 years, forecasters expect above-trend GDP growth rates and unemployment falling further below the near two-decade low of 3.8% reported this past Friday. But some economists and market watchers see a warning sign in that low unemployment rate.
When we see unemployment under 4%, around 3%, 3.5%, the last time we saw that, that is somewhat of a signal that we're getting towards the end of a bull market. We're coming into basically our 9th year of a bull market, and these usually do tend to turn around and slow down as you can have some wide deviations. And as we move forward and rates go up, we may take a breather.
A look at the past 70 years shows unemployment bottoms out just months before recessions start. Sometimes it's a full year and sometimes it's just a month. On average, unemployment hits a low a little less than 5.5 months before a recession starts. That recession can often be created by Federal Reserve interest rate hikes designed to cool an economy that it deems to be running too hot and risks inflation. Will it happen this time? The Fed currently forecasts that interest rates will rise just slightly above the so-called neutral rate, which means it expects to lightly put the brakes on. That doesn't mean a recession is inevitable. The majority of economists surveyed don't see a recession until mid-2020 at the earliest. And while inflation is rising, no one at the Fed seems ready to panic. They plan only modest rate hikes in the years ahead. But the low unemployment rate bears watching. If the Fed gets spooked by an economy that it thinks is running too hot, recessionary history could, unfortunately, repeat itself. For Nightly Business Report, I'm Steve Leisman.
Southwest books fewer passengers, and that's where we begin tonight's market focus. The airline said overall bookings fell after an engine failed during a flight in April, leaving one passenger dead. Southwest said the drop in ticket purchases would cause a measure of revenue to fall 3% this quarter. But it seems as though investors were expecting a steeper decline because the shares finished up more than 1% to $51.65. Nektar Therapeutics saw billions of dollars shaved off its market value after reporting disappointing trial results from its experimental skin cancer drug. The latest findings shows patients with melanoma are not responding as well to the treatment as past patients did. Shares of Nektar Therapeutics plunged, falling nearly 42% to $52.57. After the bell, Coupa Software said an increase in subscription revenue helped overall earnings improve and top expectations. The company also gave guidance for fiscal 2019 that beat Wall Street targets. The shares were volatile in the extended session, but finished the regular day up 2% to $55.33. And the small cap Ascena Retail reported stronger than expected earnings after the bell, even as customer visits slowed. But the owner of Ann Taylor did give a profit outlook for the current quarter that was short of estimates. So the shares sold off in after hours, erasing a 10% gain from earlier when shares closed at $3.66. Pioneering research into cancer treatment was on display at the world's biggest cancer conference. It's an event that the medical community and investors pay very close attention to. Meg Terrell is in Chicago tonight with a look at the companies leading the fight against the disease.
The world's largest cancer research conference, ASCO, drew almost 40,000 doctors, researchers, and executives to Chicago this weekend to hear about the latest advances in treating cancer. The conference also moves stocks as the biggest drug makers compete for a market worth $133 billion last year. A key rivalry is in lung cancer, where new drugs that harness the power of the immune system are making major headway. Merck, Bristol Myers Squibb, AstraZeneca, and Roche are all competing there. Merck appeared a winner out of the weekend with its drug Keytruda, which improved survival among patients with advanced non-small cell lung cancer, the most common form of the disease. Bristol Myers' CEO, though, said in an interview today that its drug looks likely interchangeable with Merck's.
When you look at the totality of the data, Meg, there is really no difference between those two medicines.
Merck's head of research disagreed.
There are no comparable data. No other agent has shown improvements in overall survival in non-small cell lung cancer. And, that's where we are right now.
Another key focus out of the conference was a major trial in breast cancer. It assessed whether chemotherapy is necessary based on a score of patients' genetic risk.
The trial showed us if a woman has an intermediate risk score, she really gets no benefit from chemo, and nobody wants chemo, so it's a good opportunity for patients.
Based on the results, doctors say they'll feel comfortable knowing that most patients can avoid toxic chemotherapies.
It's hundreds of thousands of women that will be impacted.
The results also drove up the shares of the maker of that genetic test, Genomic Health. Experts here said it's another example of the promise of personalized medicine. For Nightly Business Report, I'm Meg Terrell in Chicago.
And that breast cancer study that Meg just referenced was funded in part by the Postal Service. Yep. Proceeds from the breast cancer stamp put researchers over the top financially when they were trying to get enough money to do the landmark study. The American Cancer Society said without that stamp money, the study may never have been done. Coming up, a healthcare job that's in big demand.
More and more baby boomers are choosing to age at home, and that's created a boom in hiring in home health care. We're going to tell you more tonight on Nightly Business Report.
Global airlines are cutting their profit outlook, this as fuel costs rise. The International Air Transport Association is warning that higher interest rates and geopolitical tensions will also add to operating risks. But the stronger global economy is expected to lift passenger yields, which are seen as a proxy for airfares this year. It would be the first annual gain since 2011. Well, the U.S. economy created a lot of jobs last month. As we reported on Friday, a bulk of those positions came from the healthcare sector, and demand for healthcare workers, especially home healthcare aides, is expected to skyrocket as the population ages. Kate Rogers is in South Orange, New Jersey tonight.
For Anika Fowler, being a home health aide is an opportunity to make a difference.
When you walk into the room, you introduce yourself, and they lit up. And that's a lot for me.
The 39-year-old isn't alone. Some 3 million personal care and home health aides are employed today, and that number is expected to increase by 41% by 2026, according to the Department of Labor.
It is considered the fastest growing area of employment over that period of time. So the demand will grow as we see the aging of the population.
Companies like HomeWatch Caregivers are recruiting heavily, eager to serve a growing number of clients.
Every single day, 10,000 seniors turn 65 years of age in the United States, and over 90% of them want to age at home. So that demand itself is driving a huge amount of growth in our sector.
The company employs some 5,000 caregivers nationwide, focusing on in-home care for seniors. But finding the right aides can be a challenge, as the job is stressful and complex.
The best caregivers can handle all of that emotional content and make the lives of families and clients much easier.
The industry faces an array of challenges, including a shortage of qualified aides like these ladies, steady opportunities for workers, and low wages. To remain competitive, HomeWatch Caregivers gives background checks, trains their workers via an online course. They also hire staff as W-2 employees, not contractors, and offer benefits including insurance and a 401k plan. Aides like Fowler say the work pays off. On a typical day, she may help a patient get out of bed.
On the count of 3, I'm going to lift you up, okay? 1, 2, 3.
Check their vitals.
Oh, very good pause.
Or perform even lighter tasks like just keeping a patient company. But her most important job, being compassionate.
I love it. I love it, love it, love it. I love being a caregiver. I love giving care. And I love the fact that when I give the care, the clients or family members, they appreciate whatever little I do.
For Nightly Business Report, I'm Kate Rogers in South Orange, New Jersey.
And before we go, here's another look at the day on Wall Street. The Dow rose 178 points, the Nasdaq advanced 52, and the S&P 500 added 12. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching. We'd like to remind you that this is the time of year your public television station seeks your support. We thank you for that support. Have a great evening. We'll see you tomorrow.